Hi there traders, this is FxExplained and this is another Master Academy with Steve Miley. So welcome guys. In today's Master Academy we're going to take a look at fundamental analysis versus technical analysis. These are two different approaches to looking at markets. Fundamental analysis being the approach where we're looking at the fundamentals, the real core things that affect an economy and in turn how they affect the economy, and then they can affect different prices of assets. So whether those being equities or bonds or foreign exchange or commodities. Technical analysis we're going to take a look at in the second half of this short video, and we're going to look at how a technical analyst does a different approach. It's a very different approach to looking at markets. We'll come to that in the second half of this video. So in the first part in here we're going to look at fundamental analysis, and that can be broken down into different kind of areas of fundamental analysis. We could look at maybe the impacts of macroeconomic data. We could look at the impacts of corporate data, that's microeconomic data, corporate data. We could take a look at central bank influences on markets, and then finally we could look at the geopolitical aspects, these kind of external shocks that we can get to markets and to economies. So let's start by looking at macroeconomic data. Strong macroeconomic data, strong positive data, GDP data, employment data, retail sales data, all of this strong macroeconomic data in the first half of 2019 from January, February, March through into April all signaled a very positive tone for the US economy and saw the S&P 500, that's the top 500 stocks in the US economy on the US stock market, those 500 stocks pushing significantly higher as the outlook for the economy looked very good, very positive, given we had this strong US macroeconomic data. Not so good here as we can see in May. We're now going to look at corporate data. So corporate data is micro data. This is the actual corporate earnings, corporate revenues, looking at the balance sheet. And we get sometimes some significant moves when we have disappointments or we beat projected earnings or revenue estimates. And here we're looking at Google, Alphabet actually. Alphabet, the parent company of Google. So disappointing Q1 2019 revenue data saw an 8% immediate drop in one day for Google. We're now going to take a look at the influences potentially of central banks. Central bank meetings, central bank speakers, central bank minutes. So in here we're going to look at the ECB and the impact it had on the euro dollar. A less dovish tone in June in here from the ECB, a less dovish tone, so that's de facto a more hawkish tone. More hawkish tone meaning more, not necessarily more likely to increase rates, but not being so soft on interest rates. But this tone that came from the ECB saw a spike higher. Remember, this is just a 5-minute chart. So a real spike higher initially in the euro versus the dollar during the announcement, and then during the press conference pushing even higher. And then finally, we're going to look at geopolitical risk. Geopolitical risk takes all sorts of forms. We could be talking about political risk that could become from an election, for example, as we are potentially going to be heading for maybe in the UK this year. But we're certainly looking in 2019 at a leadership contest and a changeover of Prime Minister. So that has risks. Brexit is a geopolitical event, so that's something that's obviously been ongoing in the UK for many a month and many a year now. And we also have external shocks, maybe from war, from terrorism, and from acts of God. So say Hurricane Katrina was a great example of a weather impact, an act of God, as it were, a geopolitical event that impacted on the US economy. So let's take a look at one in here. So very recently in here, we've had the threat of higher tariffs, increased tariffs from the US on Mexico. Now that threat saw the Mexican peso sell off. So that means the dollar versus the Mexican peso pushed higher. That's dollar strength. That's Mexican peso weakness. And that Mexican peso weakness from the threat of higher tariffs, increased tariffs on Mexican goods coming into the US. Okay, we're going to now move on to take a look at technical analysis and the different approach. We looked there at the fundamental approach to analysing markets. Let's look at the technical analysis approach. The technical analysis approach is very much looking at charts. We've been looking at some charts already today, but it's analysing those charts already in more depth and by analysing those charts we can get a better understanding of future price movements. So the basic principles of technical analysis are that the price discounts everything. The fundamentals are already built into the price, so all we need to look at is the price. That price moves in trends, and we can then identify trends as technical analysts, and then by identifying those trends we can profit from jumping on those trends in markets. And then finally, that history repeats itself. The fact that past events and past impacts on markets, past price action can tell us what's going to go on in the future. The primary reason for this is that human emotions play a huge part in markets, and so then history in the form of price action tends to repeat itself. So in today's Master Academy, we've taken a look at fundamental analysis and the very basic starting point of technical analysis. There's going to be further videos on those. You can see those on FxExplained. So don't forget to join us again for another Master Academy with Steve Miley on FxExplained.co.uk. Have a great trading day. If you have any questions about this article or this video, please leave a comment below and I'll come back to you.